Hello everyone, and I've got the wave machine in the backyard pool really cranked up today, so the kids can have a bit of fun, of course. In markets, on Friday we saw the Fed chairman, Powell, sort of come out and say, yes, there is going to be tapering this year, which we've been forecasting all along when people were once forecasting it only to happen next year. And I still think interest rate hikes will happen next year and in the first half of next year. The data in Australia today was very much about second quarter profits, corporate profits. They were up a whopping 7% or so, 7.1. And there was also that rolling over still in the inventory levels. Business inventories were still up, but a much lower rate, barely managing to still be climbing really. And it just again confirms that the Australian economy was already rolling over even before we entered this lockdown period, which is now rather emphatic for all of New South Wales, Victoria, the ACT, and the Australian economy is at a standstill on the domestic front, and on the export front we face challenges as well. Commodities have had a good bounce, but they're not going to go back to where they were, and so export earnings on the mineral side going forward are going to be lower than they were last year. So the Australian economy is between a rock and an ocean, and it is in trouble. Markets generally, I do like the look of gold. Gold's having a little bit of a pullback on the day in Asia, but it does look like it is still a buy to go higher. Just see how far this pullback can come, but I still continue to suggest keep buying gold for the long term. It is the ultimate hedge against a potential further worsening of the Delta scenario. It is a hedge against inflation, which is clearly going to remain higher for longer than anyone had previously anticipated. So it's a very good buy at the moment. US stocks had that knee-jerk reaction to the upside I was expecting on Friday if Powell said particularly dovish things, which he did. The market liked the idea that interest rates won't be going up at the same time, but they never were, so slight false rally on that side of things. There was some reasonable data in the US, but again, we'll get these moments of reasonable data, but I don't expect them to be sustained. The outlook is still for growth, global growth, but very much softening all around the world, in fact. So the US could even slip into negative growth in Q4 or Q1 if the current Delta situation continues to go the way it is. And at the moment, there's a bit of a problem with the hurricanes down with New Orleans being blacked out. So there's always going to be problems. There's always going to be stimulus measures. But overall, I think it's reasonable to say that the best of stimulus is behind us. And going forward, there is a slowing on the economic front. Corporate profits in Australia, again, very similar story to the US. Strongly up, but up because they're generating inflation. Those corporate profits are the cause of inflation, and it's going to continue to be that way. So it's a short-term boost to corporate profits, but a long-term degradation of the economy and of corporate profits. So all of this good news, and I think Jackson Hole on Friday might have been the last of the good news stories. It could be over in terms of some surprise good news for the US market, and therefore for the sentiment for global equities as well. I expect the Australian market to continue to struggle on the equity side, to continue to struggle to keep up with any rallies in the US market, and any weakness in the US market will be amplified to the downside for the Australian market. US dollar having a bit of a pullback, and that pullback looks a little bit entrenched against the euro and sterling, not so much against the Australian dollar. Again, a similar story. I think the Australian dollar will be the weakest of the currencies, and I think the Australian stock market will be one of the weakest of the major equity markets. Gold, standout buying opportunity, a wonderful hedge. We're doing well on gold. Sterling Aussie is a good trade as well. Oil has had some strength, but it's starting to give that up reasonably quickly. Again, the softening outlook I see for the global economy means that it might be an idea to hedge any oil exposures you have. But my favorite sort of situation at the moment, medium to long term, is definitely to buy gold. And the other thing for the medium term at least is to keep selling Australian stocks. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.